Good day, everyone. Well, as we all know, we've got the Fed that is certainly on the dovish side in terms of the tapering issue. It looks like if they do any tapering, they said they would, but it's probably going to be a token tapering before the end of this year. The market averages have been rallying, certainly off their lows. We've got third week of a rally in the Nasdaq, and as well as the S&P. We've got many leading stocks that are doing the right thing. Tesla continues to, on a weekly chart, you'll see that the uptrend is fairly regular and linear. That is on a log plot. And the earnings and sales on this thing are just massive, and it has first mover advantage. So being the de facto leader of this rally, this bull market rally, say, that began really in late 2012. Tesla is doing great. Actually, I want to mention another stock. We haven't. We've only talked about this briefly, but SolarCity is a stock that's in solar energy, and the group has had some trouble because if you look at SPWR or FSLR, these are not looking very healthy for the time being. But SolarCity has a unique presence, and they have a chairman that we all know very well, which is Elon Musk, who does Tesla Motors. So it is the fastest growing solar company in the world, and it's possible that this could buck the trend of its solar counterparts. So we're keeping a close eye on this one, and apparently it's been installing electric vehicle charging equipment to business and commercial customers through various retail partnerships, and it's one to keep an eye on. Elon's a pretty smart guy when it comes to technologies, as he's proven time and time again. So SolarCity looks like it's trying to form some sort of double bottom. It's pretty volatile, but yesterday it had a pocket pivot. It wasn't worth mentioning at that point. It has to probably do a little bit more work, but it's trading right around its 50-day moving average. So we will keep members apprised of any interesting or actionable buy points in this stock. As far as gold and silver, well, we all know that those shot higher when the Fed announced that they would not be tapering in September, and it looks like these things they were quite oversold on a intraday base, overbought on an intraday basis, so now they're giving back some of that gain. It's possible that if the tapering is really going to be token for the next, say, 12 months, that could help precious metals and commodities find their footing and resume uptrends. If you look at the Commodities Research Bureau, you'll see that that's been in a basing pattern, but it looks like it's trying to round out that long-term base on the weekly chart. And of course, the less tapering and the more quantitative easing, the better it is for hard assets like commodities of various sorts. Gil?
Yeah, I would say the one thing I don't like about what's going on with the GLD today is it's breaking back below the 50-day moving average. I would have expected it to hold on a pullback. It seems kind of weird to me that if the Fed is on hold with respect to tapering, of course now you're hearing people talking about first it was SEP taper, and now it's OCT taper, and I guess we'll go to NOV taper. That doesn't really work so well with the word taper, but now there's talk about a tapering in October, and Bernanke is going out and talking about how, well, he never said that they were going to taper in October. They would be tapering at any time. So again, they create this uncertainty for the whole tapering process. What it looks like is happening is that, and some people speculated that Bernanke is simply setting up to hand off the job of Fed chairman to Janet Yellen, who is considered to be a dove, but we'll see. People can surprise you, and we'll just have to see what happens. But I think you can't take for granted the idea that the Fed is now on permanent QE, and you don't need to worry about that affecting the markets. I think you still have to keep an eye on what's going on in terms of price volume action. So today we've got, what is it today, Dr. K? Triple or quadruple or double options?
I don't really care. I mean, it's either triple or quadruple.
Double, whatever. Anyway, So you're basically seeing a bunch of volatility today, but there's some action today I think is really weird, and there's some reversals today. Like we were looking at this Solar City yesterday. I had a pocket pivot. You might consider the support to be more along. You can see my 65 day exponential line here. The 10-day might be more along the 10 and 20 days. The green and the magenta lines, and so it could pull back. It tends to be volatile. There's a huge amount of buying in the stock. You've got some overhead here. But it's possible coming in here, if it can hold on and the market holds together on this pullback today, that it's coming into a viable spot if you want to take a shot on this. Dr. K, I don't know if I agree with you that SunPower looks bad here. It's trying to come up the right side as well. It had a pocket pivot here 5 days ago. It's pulling back down into the 10-day moving average and the 50-day. Maybe it needs more time as well. But we're seeing.
I think it needs more time.
They probably need a little more time, but we're seeing an attempted turn in all of these names. There's the other one that I keep an eye on is this Canadian Solar, which broke down with the other solars and then it's turning around and trying to head off for new highs once again. It's actually just below its closing high here, which was back in early August, and these are holding up. So interesting moves. I don't know if these are going to pan out. The assumption is the market's in an uptrend, and what you're looking at here with the NASDAQ is a couple of days. You ran up on the Fed news, and then a couple of days of holding sideways. It's holding tighter than the S&P, which is coming in a little bit more, a little harder, but that's also in a de facto uptrend. So the call you'd have to make on the market is the uptrend is still intact, and you have to pick your spots, I think, in terms of what stocks you want to buy. And I would say, in general, you don't want to be chasing things, and just because you had a move on Wednesday that looked pretty strong, you don't want to be chasing stocks just because the market was rallying after the Fed announcement. You got to pick your spots and make sure you're coming in on proper buy points and not coming in just and buying everything willy-nilly just because the Fed announced that there's no taper this month. So it's a possibility they could still come in October, November, December. But the economy is pretty weak, wouldn't you say, Dr. K? I mean, nothing really outstanding in terms of the numbers that are coming through, right?
Right, and the unemployment numbers are not are really a bit of an illusory view of what the real situation is, because a lot of people have dropped out of the workforce, and the Fed knows it. So, despite unemployment rate being lower now than it was, say, a year ago, has a lot to do with people just dropping out. So I think the Fed needs to be real careful with how they handle quantitative easing, because they don't want to disturb an economy that's quite fragile.
And the other thing here is that the Fed did not go through with any tapering in September and this month because basically the economy sucks then, okay? Is that what they're telling us? Or is this just they're being cautious and they don't want to upend things? Or are they so wedded to QE now that they're never going to be able to get off of it? I noticed in the interview on Wednesday, a reporter asked Bernanke, well, what happens if the economy never improves? How do you ever get out of this QE? And then he started talking about studies that have shown that monetary policy is effective and blah, blah, blah. But the practical reality so far is that QE doesn't seem to have much of an effect on the economy, and in fact, studies are showing that it may detract from economic growth, and at the very least, it doesn't seem to add much at all. So there is that aspect. Is QE good?
We could have a lost decade, like the Japanese had a lost decade, now lost 2 decades, and we could have the same thing, because history shows that when you create all this debt, it's not good for your long-term economic growth. And so, this quantitative easing, which began in late 2008, was still, a late in coming in terms of these countries, U.S., UK, European countries who have all been in debt for a long time, and so QE is just added to that debt. And so the question is how are these countries going to be able to come out of this this hole in a way that will help restore economic growth? And by printing more, you're just delaying that period.
So, do you consider the market to be held up by QE alone right now, or do you think that there's a potential for the economy to turn, a la Germany and China? And do you think that's really going to happen?
Well, Germany, China are big countries, and they're showing so far they're showing signs that they're turning a corner, but the question is this really sustainable, or is it just a one-term blip? You know, when you have a situation, when you're in a downtrend, you do get your dead cat bounces. So are these reports dead cat bounces, or are they something really sustainable? And
Right.
so time will tell. We'll know within the next a couple of months if these countries continue to show strength. Then it's probably enough time to start to say, well, okay, it looks like they are getting back to health.
So I think for now, all you can conclude is that the indexes have run up and they're pulling back for a couple of days. I noticed breadth hasn't been all that exciting. You have your occasional, big move in a stock like Tesla, for example, and there's your breakout. You can see it was getting tight. You see the dry up in here. You see how the volume's drying up, and when you look at the last 2 days before it launched on Thursday, the volume is actually the lightest in the pattern. I think even lighter than these 2 days in here, and so this thing's ready to go. I've been watching LinkedIn as well, but it's pulling off today. It's breaking the 20-day exponential moving average. If you use a simple or a 17-day or a 19-day or 21-day or 22-day simple or exponential, you might be right around there on this pullback. The volume this morning is running 4% above average right now, so it's not really hectic. But the one thing to consider, this is what I talked about last week, is with that 4.38 million share secondary offering, you probably have absorbed near term a lot of the buying demand for the stock. So just a quick question. I have one person saying that I'm breaking up on the audio. Are people getting that, or am I coming in clear?
I can hear you fine.
Yeah, a lot of times that's your own internet, so if you have a lousy internet service, you're going to get that. Somebody actually got the Spanish version of GoToWebinar this morning when they logged in. We were going to play with that person's mind by opening up today's webinar with Buenos dias, bienvenidos a los webineros, so that's what we're going to call you in Spanish. Webinar attendees will be webineros. So anyways, we didn't do that, so we spared that person that little shock of coming in on the Spanish version of the GoToWebinar software. I thought that was pretty funny. In any case, just running through some of the questions, and then I'll get to some of the stuff I'm looking at. Let's see, LinkedIn we talked about here. So you've seen the pullback. This might be a buy zone in here. I'm just kind of keeping an eye on it. But volume is up a little bit. It's options expiration. So see how this holds up. So I would hate to see it break down through the 20-day and break down through support in here just below 240, because I think then you're headed to the 50-day moving average, and I think you got to keep an eye out for that. Let's see. Dr. K, people say that your mic sounds great today. You obviously got your problems worked out there. Green Mountain Coffee, this is a breakout here. All it's doing is holding above the breakout and not much else. I don't know if I'm a buyer of this one. It's a little bit slow. It makes me think of Triple D, which has the pocket pivot, runs up a little bit, and then it comes back in, and it's been a little bit slow too. The 3D names have been pretty weak. You have this rally back above the 50-day on SSYS. I don't know if this is shortable. It might be. But I would say that the short side is going to work if and only if you see the market roll over. I mean, we saw what looked like a juicy short sale setup in Lulu, Le Mans, and I got stopped out. I tested this twice and got stopped out here on the move above this high on the gap down day, and then again right at the 50-day moving average when it wouldn't hold. When these things get up to the 50-day, it doesn't necessarily mean they're going to reverse. If they hold in tight and you're shorting into that, a lot of times that means watch out. And this thing's like a big shakeout and trying to turn higher. So that one's off the table. We've also seen that with another one. This was a classic. If you look at this on a weekly chart, ARM Holdings was a classic head and shoulders, and you got this big break, looking ugly. It's leaning over. You can see my neckline being drawn there, but what it turns into is a cup with handle where I'm not sure if the handle is above the midpoint of the base. But again, this all points out the fact that you try to label bases. I think if you go with some of the action in here, you saw maybe a pocket pivot in here. I think there was a little pocket pivot right in here this day, actually, coming up above the 10-day moving average. Of course, stock back and fill. Now it's moving up in a big cup formation. You have like a 5-day handle here. I don't know if that's sufficient to generate a big price move, but this one has acted pretty well since coming up, and you had a pullback to the 10-day, and it became viable, and you get another, I don't know, is this enough for a pocket pivot, Dr. K, right here? We have 2.633 here, and
Yeah,
it looks like you had this. Well, it's a little extended from the 10-day, but it's acting okay. You know, I think though it's going to have to go sideways here if it's got more upside to it. So I wouldn't be jumping on it here. But it is a sharp move. But it's hard to buy into these moves that are straight up off the lows of the pattern, unless you're using the pocket pivots, which you could have done here, although it's a little bit tricky. Let's see. Alexion, there are a number of pocket pivots in biotechs on Wednesday. Alexion, this is actually a pocket pivot right here, and it pulls back yesterday on heavier volume, but still below average volume. So it's hanging in there. It looks like it's going to try to go higher if the market can go higher, but that's another issue. We could back and fill here again for the next couple of weeks. Doesn't mean you have to launch higher as the market tries to figure out whether the Fed's going to do, taper. I guess I'm going to succumb to using that term, even though I think it's kind of lame. But the taper in October, we'll say. Anyways, the other one that was looking like that was Celgene. Had a little pocket pivot here on Wednesday. You can see that. Today you're having another pocket pivot at the 10-day moving average. So it's been acting okay. A couple of the other biotechs, the big ones, Biogen. You might say this is a. I think I'm going to shut that thing up. That's Siri's sister over there on briefing. But you can see this. Is this a double bottom? If so, is this improper? It doesn't really matter to the stock, it seems, because it just continues going higher. So you see that also in Regeneron, which is another pattern. Is that an improper double bottom? The stock doesn't really seem to care, and it goes higher. So sometimes the way I look at these, if you see a pattern like this and you want to say, oh, this is an improper double bottom and slap a label on it, the breakout could still be viable. The trick here is that if you think this is a flawed pattern, which if it failed, in hindsight you would say, oh, that was an improper double bottom, let's slap the label on it. But if you're doing it in real time, if you think it's an improper double bottom, you buy the breakout, then what it tells you to do is if it does fail at the breakout level, you just sell immediately. And don't sit around waiting to get smacked because if it does fail, then it's telling you it is an improper double bottom. It could also be a really funky-looking cup with handle with a really deep handle, and we've seen exceptions in the past where a stock can form these cup with handle patterns with really deep handles. AOL did that in 1998, and of course, there's always exceptions like that. So we don't like to slap labels on things and say, oh well, this is improper, so we're going to put a label on it, you don't buy it. If it works, it works, and you can just go on the price volume action of the stock itself. So you had this bottom fishing pocket pivot here, and that's where you could have come into Regeneron. I think you had the same exact thing in Biogen here, and you also had a similar movement in Celgene, I believe. I think this is actually the one right here on this little pullback. It's a little pocket pivot type move there. So just pay attention to the price volume action. Forget labels. Everybody's always trying to label things. Just profit taken in GLD after Wednesday's move. I don't know. You have to call up the people who are selling it and ask them, are you taking profits? Because I can't tell you. Can you, Dr. K?
Yeah. Yes.
Is it just profit taking?
Who knows? I mean, it's just like, why? Why even ask the question? I mean, try to...
Right. What is it? All you know is to sell
all this stuff. It's just focus on the price volume, not as to the why of why it's doing it.
So the GLD, you're moving below the 50-day moving average. The SLV, you're coming right back down to the 50-day moving average. But notice the SLV, which had a very sharp move, is almost all the way back to where it started. I find this a little bit puzzling. And so, I only watch the metals. I'm not trading them or trying to buy them. And I get a lot of questions like, Gil, are you buying the metals here? It's like, I don't know. I don't think so. I already own gold, and I've owned it since 2000, and silver. As a monetary hedge, basically, and I think it's very funky here, and it's very funky to try and buy into the metals right now because of what I was talking about a little bit earlier. There's still a lot of uncertainty about what the Fed is going to do and when they're going to do it, and so I think you might see some choppiness in the metals, and it may be a more choppy than, say, stocks, which have two potential drivers. Number one, QE being the obvious driver, and number two, is the economy improving a la China and Germany? So I personally don't think it is. I don't think it's really going to. But I do think you can get, on the basis of QE, you can continue to get this sort of upside push in stocks, but it's going to be volatile. Let's see. Seems like every time B4 says a stock retires and manages to move, will VOSI be incorporating the infamous B4? Oh, that's somebody on the chat room. That's probably just a joke. Well, it is. Well, you know, I would say you could use the consensus maybe in a chat room as a contrarian indicator, but, you know, why bother? Just watch what the stocks are doing. Is GMCR a tight pattern? Well, on the weekly chart, it's going tight sideways. It's not really going anywhere. So if you want to buy it, go ahead. Other people say they can hear me fine. I did notice the other day, a couple of days ago, there were a couple of Time Warner cable trucks with the big cherry pickers on them messing around with the cable box in the neighborhood. So you never know. They could come in and shut everything down. Dr. K, there's some background voices coming in. Is that from you? Are you talking to somebody there?
Totally quiet here.
Do you have a TV?
I can't hear any background voices either. But sometimes what happens is if you have your internet's a bit funky, you're going to hear some crosstalk and some some voices, but they're not necessarily coming from the person who's giving the broadcast.
It's the NSA. Okay, no problem. Just keep all the comments nice and don't say anything bad about Obama, and we'll be fine. Blocks, info blocks, you have the gap up, the run up, not holding the 10-day. You know, a lot of times if these run up, then you could try and buy along the 10-day. If it doesn't hold, then you probably don't want to sit there with it. Volume is kind of light today, and it's just pulling in. I don't know where this thing's going to try and turn, but it's just a pullback following a big gap up. So you might think you got about a 50% retracement of that. Maybe it's going to stop in here. Would I stick my neck out and just buy the stock willy-nilly because it's pulling back? No. I'd wait and see that if it can either hold the 10-day moving average, which is what Splunk did actually. I was a little bit surprised by it. It held the 10-day, but it's reversing now. And I'd be careful with this one. It looks like a little bit of a double top. It did bounce off the 10-day. So if they hold the 10-day, you buy them there. You can try and hold on to them. But if they don't hold the line, then I'll usually back away. Let's say I bought some stock, some shares here on the Bible gap up. It ran up. Now I want to add. I add a little bit along the 10-day, but it's not holding. I would probably back away from that. So that's generally the way I would hold on to it. So HLSS. Let's see. This looks pretty ugly to me. I think the NSM and the OCN, Aquin and NationStar Financial are really the things to be owning right now, and they're acting much better. This thing's a dog, so you don't want to be buying it. It looks like a little Head and Shoulders, and it looks like it wants to break down through the 200-day moving average. So maybe you're talking about that as a short. I don't see the roundabout. Just because a stock is doing this, that's not necessarily indicating a roundabout. You need to see some pocket pivots. You'd like to see it ideally above the 50-day, but I don't know if this is a roundabout right now. It's not looking too healthy. It looks to me like it's going to break down. So, I don't anticipate things. You just wait. You just wait to see if they start to show some constructive action. It could be, maybe not. Somebody says, how did you trade NDLS today? Well, I bought it here on the lows on this day, and I sold it right here on the highs today. So I don't understand what that question is all about. How do you know that we traded the stock? So we own the stock, but we didn't trade it today. The stock broke out. You could have bought the pocket pivot in here, and if you're sitting with it, you're still hanging out about where you bought it. The thing tries to break out. It's kind of bizarre action, I have to admit, but maybe it ran out and you've got some overhead left over from the IPO where it jacked all the way up to $52, actually 51.96.99 according to my e-signal readout here. And so maybe you got some overhead selling into the pattern. If you bought down in here tight, you're okay, I think, and you can see what happens here. But this is kind of bizarre, I think. This morning we're watching a trade, and it was hovering around 45.80 or so, and then all of a sudden, kaboom, there it goes. and because I'm just noticing my P&L readout is suddenly jacking to the upside, and the stock's moving. It's trading 48, 49. I think we hit a 49.45 high. I feel sorry for the idiots who bought it up here. We talked about this morning in the pre-market pulse, and it was sitting around there for about. Let me check. Let's check a. This morning when you opened up, let's see, where do we open up? 640. That's when it launched. 635. You're sitting around 45.84, somewhere in there. So it's right in here. You could have been buying right off the opening, and then boom, it's out of there. If you were acting on that tightness today, but this is pretty typical for this market. You get these moves, and you see breakouts, and the breakouts don't really carry through. That's why even with something like Tesla, I'm actually looking at, I loaded the boat in here, and then you could have bought on this gap up, but I'm selling into this on the second day up, just based on what the market's doing, and the fact that I think it probably will back and fill. There are also some rumors out there that they're going to have a secondary, but that's the usual baloney put out by the shorts, I think. But you can see, you run out a little bit out of gas here, maybe you back in and come in. But again, these obvious breakouts to me don't always work in this market, and so I'm loath to buy them. I prefer to pick things off where they're showing tightness. And like the noodles this morning, if you're looking at, forget about today, but you're coming in tight, the volume's drying up. If you look at the weekly pattern, you can see 3 weekly closes here that are very tight. It may do that again. Maybe it's going to try and re-break out. But that's a bizarre move, and I don't know if it's trading. We're sitting with our position right now, and we're going to hang out and see where it goes. But again, I don't know why someone wants to know how are you trading your position. I think that's kind of a silly question to ask, because nobody trades. Dr. K and I don't trade exactly the same way, and I doubt if very many people trade the same way I do, where I come in and take buy a 200% position in Tesla on the jack up and then unload it into the move higher. So I don't think a lot of people do that, and so asking me how I trade, unless you're going to start doing the same thing and can handle the same volatility, I don't really think it's a relevant question. DXCM, what is this? Dexcom. Holding in a nice base, straight down, straight up, holding along the 10-day. Nothing really spectacular here. Is this a pocket pivot, Dr. K, right here? Can you check? Volume, yes. 5.4, so you get a little pocket pivot there, and it's up from there. So it's acting okay.
Yeah.
Nothing spectacular, but it's acting okay.
Yeah, the par gap. It's looking all right.
This is a good comment. It's an ascending triangle. Yeah, you could say that too, I guess. What you do is you draw, okay, let's do this for everybody. You draw a line here, and then you draw a line here. Oh, I don't think it's going to do, and like this, and like this, and so this is an ascending triangle, or maybe this is an ascending triangle, I don't know. But drawing too many lines, I don't know if that's really helpful. I would say all you need to know is that the stock broke out through this level here. You had a pocket pivot down in here, and I think we reported on that one, didn't we, Dr. K? And you have another breakout through the top here.
Yeah,
so
just recently.
I don't know. But ascending triangle, descending triangles, double flying eagle formations, all that stuff, to me it's just labels. And don't really get into it too much. You guys all know that, though. Let's see. Jazz, somebody asked, question mark. Jazz, this stock loves to keep going higher, but it's not doing much, but hanging along the 10-day moving average. So has it topped? I don't really see anything that would tell you the stock has topped. So, do you, Dr. K?
No, not at this time.
Some people say they can hear these.
It's in an uptrend, so the price volume was constructive in general.
Yeah,
so
I mean it's still an uptrend, so there's really not too much to think about.
Yeah, don't overthink it, because then you're liable to scare yourself out of a trending position.
Let's see, Yandex. Well, Yandex, we reported on a pocket pivot down here, I believe it was. You had a breakout, pull back to the 10-day, moving up. Now it's coming in, and this is pretty typical. Just go back and look at the pattern. There's a lot of jagged maneuvers in here. I think these stocks. The other one that's like this is YY. Comes down, breaks out. Here's the breakout point, and all the breakout buyers buy in here. It comes in. maybe even shakes them out because it goes more than 7 or 8% below the buy point, which would be the peak here, plus 10 cents, which is probably the most arbitrary rule I've ever heard in my life. But you buy the pullback into the 10-day. Now you run up in the new high ground, you're pulling back. I'd watch for another pullback into the 10-day if I wanted to own this stock. Let's see. Somebody says Tesla at its current levels looks very much like Qualcomm did in August, September of '99 before it went on a 300% run. Do you feel Tesla's capable of making a similar move? Dr. K, I'll let you answer that.
Say that again, one more time.
Tesla at its current levels look very much like Qualcomm did in August, September of 1999 before it went on a 300% run. Is
Well,
Tesla
yeah, I mean, this is a
capable of a similar move?
totally different time period, so I wouldn't be comparing that period of 1999 to any period today. And any similarities in the pattern are purely coincidental. But that said, that Tesla has this kind of strong pattern in this kind of environment, which is a lot weaker than 1999, speaks to the strength of Tesla. So this is a stock that it's shown that you could actually pyramid this thing and be able to stay in your position. This is a tough market environment because unfortunately the Tesla is 1 in a million. It's seemingly, whereas in '99 you had many stocks that had these kinds of patterns. So very different times we're in.
Yeah, I mean, you can see what they're talking about. This right here, this looks like the high tide flag that Tesla formed. Let's see, back in I guess around the 100 level, not too long ago. Then it ran up, and so you have 1 pullback, 2 pullbacks, 3 pullbacks. This was an ascending base, and then the stock broke out and then took off right away. So if we look at Tesla now, you can see you got this similar sort of thing. I don't know if you call this 1 pullback, 2 pullbacks, 3 pullbacks, and here's your breakout. It's noodling around a fair bit in here. So I'm not really sure it's exactly the same thing, but it's a similar sort of pattern. It's an ascending base, and they're not that common of a pattern, but when they do pop out of there, they can have big runs. So does it mean, if you want to slap a label on this, does this mean that you mortgage your house and put all your money into Tesla because it's going to do what Qualcomm did? You have to go with the day-to-day action, the price-volume action of the stock, and less trying to put labels on things and investing on that basis. All you know is that Tesla looks to me like an ascending base breakout, so you just go with it for now. We'll see what it ends up doing. Pandora. Pandora is the stock. This is one that's made us look pretty stupid because we've never been very excited about it. You have this gap down in the pattern. It turns around and you get a viable gap up here, and it's continuing higher. So there's really not much to think about it other than the fact that you had a viable gap up here, and I suppose that could have been bought if you've been following the stock. I'm puzzled as to why this stock is doing so well because I don't really see what they do as being all that special. I mean, it's just an online radio for the most part, and I don't see why someone like Apple with iTunes can't come in and do a similar thing. But I guess they're hitting on all cylinders right now, and you've got some huge volume coming into the stock.
Yeah, they got a lot of they got a great reputation for that sort of streaming, and so you could argue the fundamentals are sound with the story behind the company, but I wouldn't play this one. This kind of pattern is very rare, fortunately, because what you'll see is on the on August 23rd, it had a huge gap down on record volume. So I don't want to touch a stock that's doing that sort of thing. Plus, it tends to violate its 50-day moving average. So there's 2 reasons why I wouldn't want to touch this thing. Then it had a gap up on September 12th. But the question is that enough to erase what it's done before? A stock like this doesn't make me feel comfortable. I want to be in a stock that doesn't have these red flags.
So would you take profits into this move if you owned it? If you were brilliant enough to buy it down here?
Yeah, I probably would because of this kind of market environment we're in where you kind of have to do the opposite of what you do in normal markets, which is sometimes take profits or at least maybe sell half your position here, take the profit, and then see what happens. Wouldn't be surprised to see this thing violate its 50-day moving average again. The space it's in is very competitive. So even though it's got a great reputation, there's loads of people that are doing what they're doing. So I'd probably take the money and run, which is opposite of what I normally do. But we're in a odd Seinfeldian kind of market environment, motivated by quantitative easing.
Right. Somebody's asking if I'm off my meds. I've been off meds for quite a long time, so I think you're referring to the surgery I had over a month ago in August, and the only thing I was on was some codeine-like painkillers, but I got off of those about 2 days after the surgery, and the day after I got out of the hospital. I haven't been on anything since, and I'm pretty much back to normal, so I'm a new man, essentially. So you'd be amazed what doctors can do. I'm pretty much blown away by what they were able to do and get that tumor out of me without really touching anything else, and I'm feeling good. Anyways, thanks for asking. Is Dr. K related to Glenn Catcher of Light Street Capital fame? I'm going to say no, because I
No,
guess
not that I know of. Catcher
No.
is a pretty unusual name, the way it's spelled, and so if his spelling is the same as mine, maybe there is some relation, but not that I'm aware.
Netflix, someone's asking about. It's coming off the 10-day moving average. It's too soon for a pocket pivot. So this kind of looks like a little double top type thing to me. I don't know. I wouldn't be adding here. I would have bought, if I was looking to add to the position, I would have bought on the basis of this gap up, which I think just barely cleared the 40-day ATR requirement for a pocket pivot, Dr. K. You might double check that for me. And then it pulled back down in here along the 10-day and held the intraday low of that gap up day. So I think I would have preferred to be buying shares along here. Up here, I'm not so sure. I mean, if it gets above this volume here today, which is a possibility, then you might have a continuation pocket pivot. So I guess I actually have shorted a little bit of Netflix into the move today. It's actually making me a little bit of money today, but I'm testing this and I want to see if this is a double top and if it's weak or not. I'll see if it reverses. But that's just something I'll do, just so you know, just as a test. It doesn't really mean anything overall, because I would have, if I wanted to own, I would like to be long the stock from down here, and I would have been buying along here. I'm just wondering whether this move is valid or whether it's going to pull right back into the 10-day moving average. You can see the market's getting worse, and volume is up today. So you can alibi it by saying that it's triple witching, but I would just watch my stocks and see how they're acting. If everything's acting okay, then I think you're fine. But if you got something that's breaking down, for example, I was just watching the way Solar City is moving here on the breakout. I actually bought some into this, but I reversed the position pretty quickly because it didn't hold the 50-day moving average. I'm not going to mess with that. This thing's pretty volatile, and it's still got some overhead here, but I don't like this. It looks kind of funky. The noodles, just taking a look at it in real time, breaks out's coming in, needs to probably hold. It held the lows along this handle area here, just under 44, so it's hanging in there. So it's maybe okay, but watch this market. Could the market top here? Hey, Dr. K, do you think the market can top here, or is this a shoe-in for further upside?
Well, who knows if the market? We'll know if the market's going to top. We'll see it in the price volume. But for now, we're in an uptrend.
Okay, and we're just getting a really nice sell-off today. How do you pronounce this? Is this a Zoom or Zoom? I don't really know. Or
Zoom.
Zoom. Okay.
Yeah, it's not Spanish,
today?
so it's actually.
Oh, I thought it was a Spanish company called Zoom. But anyways, just like Mexico,
Right.
Anyways, what do you got here? You got a pocket pivot thing here going on. You got a gap up move here. I don't know if it's a Bible gap up. Stocks up again. Dr. K, is this today a pocket pivot?
I would say it is, even though it's a little extended. I mean, it did sideways move for the last 7 days, so it's looking constructive. But it's still a bit, the pattern's a bit sharp. It went straight down and it came straight up.
Right.
You got great earnings, and the sales are picking up. Overall, it looks pretty good. It had that gap up after its last earnings report. So, this is one of those situations where you might want to take a small position in it, but knowing that it's going to be pretty volatile.
Yeah, it's a small stock too. Average daily volume about 447,000 shares here. So coming up, but let's see. FU, a Fab, Unis short, or what? I don't know what this is. FU, I don't know. I don't. The Fab Universal Corp. a short. I wouldn't short this stock. I don't really know what's going on. So, and you don't short stocks just because they're up there in rallies. I don't think this fits the definition of your rocket stock situation. Is that correct, Dr. K?
Right. Those are very rare.
No, so not a short. You know, I mean, if you think you can short it because it's too high or something. Facebook, it's not doing much anything. You can see Facebook is in a very uniform uptrend. You got one pullback in here, maybe another pullback here, but this is sort of an ascending pattern as well, and it's acting okay. I think what we were talking about the other day, I think on Monday, is that one could use a violation of the 10-day moving average, which it didn't do. It broke down through the 10-day moving average on Monday morning and then turned around and came right back up in a pocket pivot, continuation pocket pivot. Dr. K, I think you were mentioning something about using a violation of the 10-day maybe as a near-term stop or a tight stop to keep to preserve profits in an environment where you can see stocks that have run up suddenly turn back to the downside and give up their gains. Is that correct?
Right. You know, otherwise, in more normal environments, you want to use the 7-week rule with leading stocks because that'll give you potentially the greatest gains and allow you to sit with the position for many weeks.
Right. People talking about, let's see, NQ, asking about NQ. Well, I guess you had a Bible gap up here. We picked off the pocket pivot. So if you got in on the pocket pivot day, you're doing fine. And then there's discussion about whether this is a high tide flag or not. Yeah, maybe it is, maybe it isn't. I don't really need to put a label on it. All you know is you had a pocket pivot buy point here, and you had a Bible gap up type move here, and if you gave it some porosity here, the next day it reverses on a big outside reversal day, looking ugly, but it turns right back to the upside. So you know, no real problems there. It's acting okay. It's a thinner, smaller Chinese stock with about 47 funds, I believe, owning it. And to that extent, it reminds me of YY because I think YY only has about 27 funds owning it. So they're not heavily trafficked in by the institutions, and so there is an added risk, and I think you just have to be careful with that and not get carried away. If you bought the pocket pivot, I think you're okay. I know some people have asked me, you know, IBD talks about the high tide flag and how stocks can have 200% moves from such a pattern. Yeah, you know, in the 80s and 90s before QE, maybe that was the case, but I wouldn't slap a label on this and say, oh, well, it's entitled to a 200% move from here. You know, Tesla could have the same thing. It came out of a high tide flag. I think this was a high tide flag, and that's, to me, that's a tight flag because it's pretty tight. The closes are tight. Another one also that was like that is Yelp. Was pretty tight in here. So I kind of like those as high tide flags, and I think the moves you get off of those are much better than these. And I know where this pattern is coming from. It's coming from Syntex in like 60, when was it, 66 to 69? I think it was 66 where it had its big move, right, Dr. K? Because Syntex had more of a deeper correction within the flag formation, you know, 23%. But you know, the other thing I would point out, and this is a problem I've always had with some of the labeling of bases. You know, they want to tell you that, oh, you know, this base will have a 20-something% decline in it. But the problem is, and we know this for a fact because Dr. K worked on the model book studies and I was involved in it too, is that they cherry pick the patterns, or they cherry pick the stocks. And so you'll get 10 examples of a stock maybe that fits a certain pattern, and then they derive these rules from that. And in my view, that's statistically insignificant to use a sample size of 10, even 20, I don't think is sufficient. And I remember, Dr. K, you were mentioning something to me in that 97 model book that you worked on, the one that we call the coffee table model book. It was a model book with charts so big that this book was the size of a coffee table. You could have put legs on it and use it as a coffee table. We used to joke about that.
They could have used that in that Seinfeld episode with the coffee tables easily.
Right, and you know, you look at all the stocks. In my view, if you're doing a model book study, you're going to look at every stock that had a huge move in a given year, and then you're going to look at what the common characteristics of all of those stocks were. In my mind, that's how you properly analyze the factors that drive stock price performance within any given period. And what we notice is that what happens is certain stocks get cherry-picked, which is fine. You know, if you're looking for stocks that are institutional quality, and they share certain characteristics. I think that's fine to use that as a template for buying stocks. But I think also to reject other stocks that have had 100 or 200% moves within a year, and keep those out of your study, I think it ignores discovering what some of the other factors might be that might be different during a particular environment. Example would be 1999. Dr. K's studies were showing that sales growth was suddenly, there's always been current earnings, annual earnings, new products, so on and so forth. The S in Can Slim, I used to think stood for sponsorship, but I guess it's supply-demand, which is kind of vague. But in any case, back then I think they used to indicate that you wanted to buy stocks with smaller capitalizations, and since then we've seen bigger caps lead. But anyways, Dr. K, back then you found that sales growth was a big driver in the movements of a lot of stocks. And so, looking at everything and not just cherry-picking the patterns, I think is a better way to do it, and also a better way to attune yourself to what variations might be working in any particular environment. And so one thing I've noticed looking at stocks that have big moves, a lot of stocks will have big moves when they have big estimates rather than big current earnings, and that's been one factor that's caused.
Right. Yeah, that's been true for a long time. I remember doing a study just on that particular question in 2007, and it was going back all the way back to 2003, so 5 years of data, and big earnings estimates translated into a fairly predictive indicator for how the stock was going to do. But right. I mean it was a 1998 model book that I was the editor, and I remember O'Neill was resistant to including some names that I wanted to put in, and we reluctantly put them in. But it goes back to he wanted to basically the stocks he put in he wanted to conform with his idea of what a model book stock is, while right. ignoring the fact that there were actually some, maybe they were a little on the thinner side by his standards, but nevertheless he did very, very well, and so we did include some of those. And I remember that was always a sore point because he didn't like changing around his paradigm.
Right, and when I approach the problem is I want to look at, one of the things I like to do is look at every stock that has performed really well over the last 6 months, and I'll go through every single one of those stocks, and I'll look at the characteristics, and you can see how sometimes it's changing depending on the environment, and you don't stay in tune with how it's changing, I think, unless you're doing that, and doing it objectively without cherry-picking what you're looking at. And all this is to say that when you hear about a label of the stock pattern, a chart pattern, it's got X% down, and it goes up a certain percent first and pulls back a certain percent, and blah blah blah. A lot of that I think is based on statistically insignificant sample sizes, and so we've tried to approach the problem a little bit more differently and focus on the price volume action using pocket pivots and viable gap ups and the 7-week rule. And I think that's a more concrete and effective way of dealing with it, rather than slapping a label on something and saying, oh yeah, this is a high-tech flag, so it's going up 200%. I mean, yeah, every stock has potential to go up 200%. Even stocks that don't fit Can Slim characteristics, and we know that for a fact. Anyways, so I would urge you all, if you do study the market, just do, what I like to do is just run a screen. Every stock that's up 100% over the last six months, or up 50% over the last 6 months, and see what you get, and then run through the characteristics of all those stocks without having any bias, and see what it tells you, if anything. Somebody says, Dr. Gill, you and Dr. K seem to be trading and ringing the register an awful lot in the current market. Is buy right and sit tight not applicable? I don't know. There's some stocks, if you just bought them like Tesla and held on to them, you'd still be doing fine. So there are also stocks that run up and break down. But how do you know what Dr. K and I are doing? Seem to be trading. You don't know what we're doing. How do you know that I'm not sitting on core positions of certain stocks and then trading heavily around them? So that's a combination of the two styles. I think it's just a matter of how you trade. If you buy smaller positions and you sit for a while and you've had some that work, you could still be with them. But there have been stocks that have had moves up and then they come right back in. So I like to trade aggressively and actively, and my position in this market environment has been to take profits when things look ripe, and to look at buying stocks when they look rotten. And we talked about this in the chat room, the ugly duckling theory and whatnot. And that's kind of been how QE market has acted. And you can go back and look at the indexes themselves, and you can see that the times where the market has looked incredibly ugly and like it's going to break to the downside. I think June was one of those periods. Even recently, you know, the Nasdaq's sitting on the 50-day moving average, the S&P underneath the 50-day moving average, the Dow breaking down hard, and the Russell 2000 also below its 50-day moving average. That looked like it wanted to go lower, but of course what happens, the market starts turning. And your first clue is the action in individual stocks rather than trying to put a label on the market, market in uptrend, market in downtrend, whatever. Anyways, I want to get to some stocks here. VRX, people are asking about. Not much here. You get a like a pocket pivot breakout. It's coming in, so that's all it's doing. Trulia, let's go. I'm going to go in order here. E-government pulling back to the 10-day moving average. I guess if you like this stock and you like the story, you're getting the pullback to the 10-day line, and it looks like it doesn't look like you got any pocket pivots in here yet. So, but you know, you got a sharp move up, and pulling back to the 10-week line. That's the first pullback. So sometimes that is viable. So, you know, you might look at buying it if you like it. SFM, Sprouts, breaking out. You got a weekly breakout here. You can see the volumes picking up on the weekly chart. To me, it looks like a flag breakout. I'd rather, if I'm going to pick this up, it's a little loose in here. I'd like to see it get tighter. Dr. K, do you have any thoughts on this SFM or any assessment of what's going on here?
You know,
how would you handle this?
Had that mini gap to new highs. The volume was okay on that day, and now it's going up again. It is at IPO. You know, the sales and earnings have been looking pretty good on this. The whole concept is sound. We've seen what happened with Whole Foods.
Yeah, and we talked about this a couple of weeks ago. I think that we liked it, right, Dr. K? We liked the fundamentals here. So now you're getting a breakout, but you can't. What you're getting is a pocket pivot breakout here yesterday, right? And that's what that looks like to me. And so I guess that becomes viable. So the closer you come into, say, 42, maybe even you dip below it, then it's in viable territory. But it looks to me like it's coming out. It came out yesterday, and then of course it does the same noodles type thing where it runs up and it's coming right back into the lows. Agilent, not really a stock I've been paying attention to. Poor earnings growth. You know, it's a big cap stock. Last quarter's earnings were negative 14%. Sales were negative 4%. Before that, 0% and 0% sales growth. And then the quarter before that, negative 9% and 3%. So sales growth is decelerating. Next quarter's earnings are looking for an 11% decline. So, you know, stock's coming out, but I don't know what to tell you. It's not something I would buy, given the earnings and sales trajectory. Tesla crossing up, somebody's talking about. I guess Dow is down 100, but Russell 2000 is green. That should tell you where market strength is at. Yeah, the smaller stocks have been working. I think it's been a little bit obvious more recently. Silica Holdings, you can see you had a pocket pivot here. Guess what the stock's doing on the weekly chart? It's trying to round out a base. Notice all the nice little tight closes along the 10-week line. So that actually looks great on the weekly chart. And the selling volume on the weekly chart has been drawing up. So you had a pocket pivot here. You had another pocket pivot here 3 days ago on Wednesday. And now you're trying to hang along the 10-day on the pullback. It might be viable on the pullback. It looks like it's trying to come up and around. So I know there's been some news about fracking in other countries, and that's going to start to pick up. I don't know what their exposure is to it, but the stock price volume action is not too bad here. And you can see on the weekly chart, it's just building this long base, and that really seems to be all it's doing. InvenSense, oh God, I hate the stock. I mean, this thing looks like it's starting to go, and they whack it yesterday, and it bounces off the 50-day moving average of 10-week line. And today it tries to go higher, and it's spinning all over the place. I guess the whole thing here is they're taking apart the iPhone 5S, and they're not finding any InvenSense chips in there. At least that's what I'm hearing. And so the stock's pulling back to the 10-week moving average. It's just very erratic. You know, I just don't play it. You know, I'm not sure what to think of it. I think it's too funky for me, anyways. Let me see if I can go through any stocks that I'm looking at right now. Acadia's been acting pretty well. You know, stocks continuing to move higher. That looks good. Amazon. Interestingly, I noticed Amazon had this sort of pocket pivot. It came all the way back down to the breakout point in the base. You can see this big base here, all the way back down. Then you have this little pocket pivot here underneath the 50-day, and it has actually followed through with another pocket pivot on Tuesday, and the stock is now breaking out to new highs, which probably means if you bought it down here, you'd probably sell it. This is probably coming in. So that's a joke, but that's kind of what the stock seems to do. Some other things acting pretty well. This Mylan Labs, viable gap up type move here. Another viable gap up. It failed here. It didn't hold up. And trying to move off the 10-day moving average. Interesting stock, acting well. Ambarella is another stock I love to hate. You had this big sort of viable gap up move, but it's coming up from the bottom and held the 50-day. So you might consider that sort of a marginal pocket pivot type move. And then the next day you do get a, let's see, well, the volume isn't high enough to be a pocket pivot, but it's trying to come up again. So I'm not sure what to make of this. But it is acting well. Also, I noticed Bonanza Creek Energy. Now here's an example of a stock that you look at this base here, and you can see, is that a ugly-looking cup with handle, or is that a double bottom, an improper double bottom where the second low does not undercut the first low? Well, you got a breakout, and it does turn out to be faulty, so it corrects that and turns around. You get a pocket pivot right here, coming off well at the 10-day, and the stock is breaking out in here and going higher. So another fracking-related name, and it has acted pretty well since then. So some of the oil names have been acting well. I guess we're turning the corner here on an hour, so we're getting towards the end of our today's webinar for all you webineros. Let's see. Looking around, I know this is AbbVie. I've been keeping an eye on this one for a while. This one turned and is breaking out. Kind of a weird-looking, is that an improper double bottom or a deep handle cup with handle? The market's getting worse here, so I don't know what to make of this. Just watch your stock. So I guess that's really. Pardon me.
On that stock, the earnings and the sales aren't so great either. So
no, but it's moving up and funky. So anyway, ACT is probably another one I should look at real quickly. On the weekly chart, stocks broke out here, nice base. You got tight in here. See that just before it breaks out. You're always looking for that kind of stuff. Closing at the peak of the range or close to the peak of the range these 3 weeks in here and closing tight, and boom, it comes out. But it's not rip-roaring to the upside. It looks to me like you buy it on weakness, and that's the best way to handle it. Somebody's asking, oh, wait, I got to pick up a couple. Google had a pocket pivot the other day. Bingo, right there, and it's holding up. Does that mean it's going to turn? See, it tried to break out, failed, now here it comes again. Maybe it's going to re-break out. I don't know.
It's been pretty slow,
thanks for reminding me. Trulia, volatile stock, you buy it on weakness coming into the 10-day. That's the only way I would handle it. So I had some of this, and we got a move, nice move up of here, and sold into that. It's too volatile for me, I just noticed. And even though it trades 882,000 shares, it's just kind of crazy. And so it's tough to handle, and I think if you're going to buy this, you got to look to be buying it on weakness coming into logical areas of support. Now, what you can look at here, you had a breakout attempt here. I guess you cleared this base here, and you're running up, and now you're pulling back to the top of the base and the 10-day line. So maybe it's viable there. That's a possibility. So anyways, that's the last question we have, and that's kind of where we're at. We're putting out reports. You can see where stocks are actionable as buys. It's still a volatile environment, I think, and I still think you have to take a general approach of looking to sell into extreme strength and sharp moves to the upside, and then look for re-entries. Okay, here comes someone with the AFOP. This is an interesting stock. It's pretty volatile. Runs up, comes down, runs up, comes down. You got a viable gap up here. It looks like it's holding it. I might seek to buy some weakness in here. The market's getting worse though, so you might get a chance to buy some of these on some weakness before the day is done if this continues at this pace. So market just seems to continually be deteriorating. You don't see this as a problem, Dr. K, just offhand? Or is the market just pulling back?
I'm not going to try to predict the top because you know how many times tops have been predicted since 2009.
Oh, come on, go for it.
And so, we'll see it. But, the leading stocks are doing, better than they have before. And this has been a really tough year because a lot of leading stocks earlier in the year would break out and then they would come right back in, forcing one out of the position. And, it's very easy to get nickeled and dimed in this kind of environment.
Or drawn and quartered. anyways, somebody asked, is the book you started working on about shorting or something else? I guess shorting's in it, but there's probably a couple other topics. I'm trying to outline it right now, and there's probably some other topics such as the whole roundabout concept and bottom fishing pocket pivots and how they worked in this market environment. It's possible there could be a chapter on that. We're just trying to lay it out right now. We got derailed, obviously, during the summer when my surgery came up and all that. All my health issues got in the way of stuff, so we're back on that. But it'll have short selling and probably a couple other topics in there as well. But we'll see when we get to writing it. Anyways, but just right now, just outlining the book. So I'm starting to maybe write some of the initial chapters, putting the material together. Anyways, that is all I have. It's 11:03, so we're pretty much done for today. I think you just have to be opportunistic in this market. You look for strong stocks pulling into areas where they might find support and operate on that basis. So just be very careful about buying into abject strength and piling in when you see things up, because the market is still acting like a QE market. So any last comments, Dr. K, or are we done?
I think we're good. Good for the weekend.
All right, very good, everyone. Have a great weekend, and we'll catch you next week. Take care and good luck.